guys, and welcome back to another video and welcome back to my channel. If you are new here, hi, my name's Ava and I'm a mortgage power planner. Now in today's video, if you have watched my previous video about the vision board, which is right there, and also my goals for 2021, you'll know that I actually have an exam coming up. So with that in mind, I thought, well, why not kill two birds with one stone? So in today's video, as you can probably tell by the title, we're going to be talking about Oeics, or open-ended investment companies. So without further ado, let's jump right into the video. So let's start with explaining what Oeics actually are. The clue is kind of in the name. It's an open-ended investment vehicle. Now, with this one, the underlying legal structure is actually a company, but not a company that we normally are aware of. So it's not like a Tesco's or anything like that. And the reason for that is because different legislation actually applies to Oeics compared with the Companies Act that normally applies to companies. But ultimately, with the company structure, that allows them to have share capital, which allows them to expand and contract to actually meet investor demand. But that's the boring bit over. So basically, Oeics are just a collective investment where all the assets, all the individual investor assets are pooled together to create like a massive portfolio of investments, of which you then own a share of that and you get dividends paid from that. So with this in mind, let's jump into how they actually work. So individual investors' assets are pooled together on a collective basis in a centrally managed fund, which is then invested by professional fund managers. The assets within the Oeic are then valued on a net asset value basis. So for example, if the Oeic holds a portfolio of securities worth £25 million and there are subsequently 10 million shares, then the net asset value, or NAV for short, is £2.50 per share. So in simple terms, basically what you do is you buy shares in this Oeic, which could be invested in the likes of property, in the likes of government bonds, equity shares, anything like that. So if you don't know what you want to invest in, this is a great way to start, as it diversifies your portfolio automatically and it's managed by professional fund managers. So let's talk about the advantages. So number one is the fact that they are the most widely recognised type of collective investment in Europe. So they're widely available, you can type it into Google and loads of results will come up as to where you can actually invest in one. Secondly, the Oeic regulations permit multiple share classes, which allow more flexible charging and currency structures. Thirdly, they can actually be held in an ISA, meaning that you can actually take advantage of the tax-free allowance, which is currently £20,000 per year, meaning that you won't actually have to pay any tax on the dividends up to £20,000 in that particular year. So it's very tax efficient. And they can also operate under umbrella companies, making the creation of new funds a lot easier, which gives investors a wider range of investments to actually choose from. And ultimately, it's ideal for people who can't decide what to invest in. So if you were thinking of perhaps investing in property or shares, but you didn't know which one's best, you may as well go for both, and the Oeic will allow you to do that. And as I say, it's managed by professional fund managers who most of the time know exactly what they're doing. Now, with the fact that obviously it's managed by professional fund managers, comes the fact that there are quite high charges involved in this, as you will most likely have to pay an annual management charge to actually keep those fund managers in the job, because you're paying their salaries ultimately. So there will be a level of charges involved in this. Now, different companies have different charging structures, so you just have to do a bit of research to find the best one for you. Also, in terms of the returns, I will pop up a screenshot of ones that are found, published by the Interactive Investor. However, past performance is not indicative of future performance, so you can't rely on the past performance of a particular OEIC or a particular asset class when you try and determine what to invest in. So always make sure you do more research if you are looking to invest in anything really. Ultimately, your capital is at risk with any investment, so you could potentially lose all your money. So make sure this is the right thing for you to do. So that is it for this video. I know it's a bit technical, so it can come across as a little bit boring, but ultimately when I read about it, I thought this is actually such a good investment vehicle, and I'll personally be looking into that and looking to invest in such a thing. So it's definitely worth exploring, as it gives you more options rather than just having to directly invest in the likes of property or shares. You know, you do have professionals looking at it for you. So with that being said, if you like this video, please give it a thumbs up and also subscribe to my channel down below. As you know, I'm trying to hit 1,000 subscribers by the end of 2021, so I would love it if you could join me on that journey. Thank you for watching, and I'll see you back on Friday with a brand new video. Bye guys!